Yo, what's up guys? Welcome back. As always, Tom Crown. Today we have a pretty spicy, I won't call it emergency update, but we got a spicy update here. The market's doing some interesting things here over the weekend. We have just over a day until the new week starts, and there's a few things that I'm looking at that I think is going to pack your bowl of hopium for you, and that's just what we need here on the weekend. So before we get into it, and we will very shortly, today's stream gonna be, or I'm aiming for it to be, a little bit shorter than usual. We're gonna go live again tomorrow. Just wanted to get something out there. I noticed no one else is streaming, and you guys need an update because there actually is some really spicy stuff going on. In the last live stream, you saw me trading 200 something K, getting stopped out, losing thousands of dollars, and yeah, we're all right. We're all right. However, if you follow me on Twitter or you're in the Discord, highly recommend you do, you would have seen I published a short on the breakout that night, about 24 hours ago, took profit at 20K, and I wanted to tell you guys or walk you guys through kind of why. What was I doing? What was I thinking? And we're going to get into that as well. I have some pretty spicy stuff that we're going to be taking a peek at that's going to have a huge weight on what happens into next week. And man, I'm excited to get this done. I'm excited to get it done. So if you're here in the chat, smash the likes and subscribes, engage with the live stream.
Ethereum, and you put it into an LSD.
I don't want your acid, Joe.
Listen, Donald, like when staking, man, you get yield.
Oh, right, yield. More like Terra Luna, scammer.
No, it's not like Terra Luna.
So what's the yield, Joe? Where's it come from?
It comes from the network, man, for staking.
Oh, great, inflation. You Democrats and your money printer.
It's not inflation, you moron. It's deflationary.
Deflationary and yield. Listen to yourself, Joe. You're getting scammed.
Whatever, man. Stay poor.
And not poor, Joe. You're poor.
Just this channel we were looking at, still in play, no lower low off of the high of our channel. Things are looking okay. However, it is no surprise to anyone in this chat that we did have a pretty gnarly day yesterday. I believe stocks actually had a pretty solid green day, while we see the corn packing about a -5% candle, not looking so hot. This is the basic structure of what I'm looking at here. I have Lux Algo pulled up. That's the live order block data here. We're just looking at liquidity. You can check out Lux in the link. So basically what's going on? Well, we had the 200 weekly, this green moving average above us. That's overlapping with 25K. Just review here, that was August's high. So we have many reasons to find resistance. We have a weekly high. We have a very major moving average. Lots of selling pressure here. But this is, and as I've been saying, kind of the last stop. If we break above the 200, there's very little above Bitcoin until we get into like the 30s, maybe even 40, 50Ks. For now, I'm still looking for those targets into this year, as high as 48 or 50K. I know that sounds crazy, but I'll show you in the next chart why I remain that way, or of that opinion, and what's going to invalidate that, or what's going to make me no longer look for that. And on the touch, wow, something's weird with this volume today. And on the touch last night, we came very close to invalidating that. So let's take a peek. To make things really simple, 23.3 was basically the price that never ended. We just saw constant trading over the last week, 23.1, 23.5, back and forth. And then we got kind of a sell out of nowhere. So what happened? Why did we do this? People are speculating, oh, this has to do with FUD or whatever scenario. However, I'm going to disagree. To go over the trade really quick, right here, change of character. We had a low, we had a high, the low is broken. I literally market ordered into that short position at 50x like a complete degen. You guys you're rubbing off on me. At around, I think it was like 23.1. I closed at 22K. That seemed random on the way down, but you look at the daily chart, that's the bottom of this, let's call it a broadening ascending pattern. I don't believe this pattern is complete yet. I think we'll see it paint out into something else. However, something to be noted about this pattern, this is not a good pattern. This is not a bullish pattern. It does imply maybe we even have one more high to go. But without this pattern breaking, we are in a pretty crappy place. This is a broadening wedge at the moment. If we flip the chart upside down, we might look for something like this, where we see a break. Maybe we can get one more touch, but maybe we see the break, back test, and bump. And unfortunately, charts inverted, that's pretty bearish. These are not solid bullish patterns. If you look back to really quickly over here, May, June of 2021 in the summer, we had a really similar broadening pattern at a low that brought us back to a high. So these patterns do technically resolve to the upside more than the downside. So I'm not loving it. I do think we'll see it paint out into something else. But let me bring my supporting information in. Let me bring in the big guns. So we have two incredibly macro charts that are telling us really important big things. Let's pay attention to them. We talk about this all the time. I swear I never shut up about it, but this is my guide. This is my map of navigating what's going on right now. No one knows if we're in a bull market or still in a bear market. We won't know that until hindsight. So we need to find ways that we can say, okay, while this is true, we're going to look for this. And when that's invalidated, we're going to look for the opposite. This has been my gauge, and it remains my gauge. With that touch of 22K on Bitcoin, something really important on total crypto market cap happened again. Unlike Bitcoin, total crypto market cap has been a little bit more bullish. It tested its 200 weekly before Bitcoin, rejected to a higher low, pushed past it, dicked around underneath it a little bit, popped up for a higher high, and look at where total crypto market cap landed on that wick. It did trade slightly below the 200. However, that was only intraday. It settled up higher. So we've been saying this for weeks and weeks, what seems like months. As long as total is above the 200 weekly, my trading bias is going to remain to the upside. If total loses the 200 weekly, my trading bias is going to then be to the downside, looking for either equal lows, potentially lower lows, etc. You can see right here, we're at that point, 987 billion, literally within a margin of error of the 200 weekly. So the combination of the touch to the 200 with the touch to this ascending low channel or ascending low trend here, that was my tip off to close the short. We closed for like 200%. In the past, we've seen lots of volatility on Coinbase's maintenance times. However, it seems like the market does not care today. It is Saturday. Tomorrow is Sunday. I don't expect a lot of volatility today, perhaps into the turnover to Sunday or Monday. But today, with where Bitcoin's at, I'm just seeing some sideways trading. Where will we look? Well, we can see right here, identified by these price action concepts, live order block data, 32% or 3.34 million. Right here, sitting at 21.4 our low. This would be the prime liquidity sweep spot. If we're going to blast through the top of this and continue on, it would not be surprising to me to see possibly a return to that 23.2, although it technically already happened on whatever exchange that was. I thought it was Coinbase. And then move to sweep this liquidity. That may offer a really interesting long position to the right trader. Of course, not financial advice, guys. These are just theories, concepts to help you adjust your compasses. This would be pretty prime. I think there's a slick play to be made there. We don't see that order block data being identified down here at 20.4. However, I think the same concept will apply. If we do see a wick below 20.4, we may see a very strong buying response. That may be the essentially move up, pull back to stop positions before moving up again. These are kind of just the roadmaps that I'm looking at. Of course, we could say 18.5, we had resistance there. Lots of inefficiency in price action. Price is liable to return to that 18.5 just to fill in that inefficiency, as we see happen a lot. Let's start with the hopium. Let's start with the hopium chart. So there's a really interesting dynamic at play right now. In the past, we've seen Bitcoin, stocks, and the dollar trade very predictably in a pattern. Essentially, the dollar moves and stocks and Bitcoin move in the other direction. However, on Friday and into this weekend, apparently, until we see Monday open and maybe something will change, we have something very spicy on the S&P 500 that is contrasting to Bitcoin's current state and somewhat reminiscent of total. So let's zoom in here. I applied the 200 daily moving average on the S&P or SPX right here, and just eyeing this, you can kind of see that this has been a pretty respected level in the S&P's history. The times where it does break below, it tends to find buyers and it tends to jump back up above that moving average. This kind of price action, very characteristic. You pull below and then you start kind of doing these stair steps up. I've been looking for upside on stocks, and I think this is going to be the signal. The 200 daily has interacted with the S&P perfectly right here. If we add in trend lines connecting basically our highs, we'll find that this 200 is also directly at our descending trend line here from our highs. It's really the perfect spot for the S&P 500 to bounce. If we see Monday open green, that would suggest probably a weak dollar. Look for 4,200. If we get a break of February's high in March off of this 200, this is going to look to re-explore some of these upside resistances. 4,600, potentially even looking back to the all-time high at nearly 5,000. 500 until proven wrong, aka trading below this 200, looking incredibly bullish into this week ahead, combined with total where it is and Bitcoin at this trend line. We have some really interesting possibilities going into Monday. To get into our last macro charts here, the dollar. We were really watching this last week. It had a ripper of a week the week before. The weekly settled up just slightly red, down 0.7%. Week of being pulled back. We do see a wick at the bottom of that week showing buyers. The dollar could still show strength into next week, but if we look at the S&P 500, we would say that's probably not as likely. Perhaps into maybe the dollar will open red and the S&P will open green, and then intra-week or by midweek that will reverse. But I'm looking probably for a green open for stocks. Pretty fancy. Still targeting about 109 for the dollar, looking for that dead cat bounce into a lower high, and let's just send the dollar back down and our assets back up. That would be fancy. Last macro chart, gold. Last macro chart. Gold and the dollar actually looking weirdly the same when we look at the day versus the week here. Kind of a blow off top for gold, a retrace, and now we're seeing that bounce. Very similar to the weekly on the dollar. We were a little skeptical of gold into the close of February. It did manage to find buyers, avoid the bearish engulf, and now we're seeing it starting to move back up. I think this is a good sign, as typically when gold has trended up, we've seen stocks and Bitcoin, other assets perform well. I'm not sold. I don't know if it's going to make it all the way back to its yearly high about 1950, but I'm watching gold for sure. I'm looking for at least a 618 retrace to 1900. It may then find its lower high, similar to what we're looking for on the dollar. And well, that's getting too far into the future. So the really big takeaways today, God, that looked like a big move for a minute. The really big takeaways today are this. Watch these levels. We have potential to grab liquidity. Remember, markets are always seeking out liquidity. Below us, just under 21.3, February swing low off of the 200 weekly. Below that, we can have some targets, but it really is going to be, in my opinion, more of a wait and watch thing. While this holds, everything is okay. Above 22K, we're still in this, admittedly, not a great pattern to be in, but we're still trending up. A move down into any of these liquidity zones, potentially even lower, that could be the fuel to push price back above the 200 week and send us soaring. But we're going to have to take this one step at a time. Watch your liquidity levels here. And remember, if 22K holds, this is really actually looking great. Biggest takeaway on the test of that trend was the 200 total weekly market cap test. It did hold. We are flirting with it not holding. A very small move to the downside can invalidate this, and it's going to change my trading bias in streams to more of the downside. While we're below the 200, this is a brain dead strategy. Looking at total, is it doing better than the last 200 weeks or 200? Yeah, 200 weeks. That's a long time. 4 years. Is it below its moving average of 4 years? That's probably a bearish sign. Is it above it? Well, that's not the most bullish, but it's bullish while it remains there. So the logic behind this trade that we put, though you can't actually trade this, is still valid. The 200 has held. Bitcoin has hit an ascending trend line, and we haven't seen lower lows yet. So we're basically on a paper thin line between falling and retracing, and if it falls out of 22K, we don't know where it will go. There's no way to know where it will bounce, but we can narrow it down from every number between 15.5 and 22K. We can narrow it down to say, well, probably 21.3. This is where we're seeing live liquidity resting. Over here in January, right underneath 20.5. This was the only real pullback. We haven't seen that low broken, but this is a logical place. This is what you have to think of for liquidity. The logical place for people to set stops for their longs. If price wants to move up, it needs to close longs, especially over leveraged longs. If it wants to move down, it needs to close shorts. That's why you very commonly see a move up before a big move down, or a big move down before a big move up. You're building liquidity, baiting in orders, stopping out orders in the right direction before sending it. The S&P 500 is giving us such a crazy good signal. I can't even ask for more. Like the day, what is it, on Thursday, literally opened below the 200, ended up closing green, bullish engulfed, little bit of a gap before a large bodied candle again. So opening on Monday at 9:30 on US New York Open, watch the S&P 500. That's going to be huge. You guys know I don't usually look or pay as much attention to stocks, but this is undeniable. This is the way, crownanalysis.com. Check it out, bookmark it. If you want to write articles, we're looking for more authors. Send me a DM on Discord. We are looking at some interesting things. Of course, we'll update you really quickly here. The FOMC in 2 weeks, 4 days, we will be covering it. We're seeing that 50 BPS probability inch up week over week, and we potentially are going to see talk of 75 BPS. We got 2 weeks and 4 days to go. The way this has been trending, 75 BPS talk, definitely looking likely right now. Remember, the more hawkish or the higher these hikes are, the more downside pressure on markets we've seen and the more upside pressure on the dollar. So these are not very bullish. March's FOMC meeting gonna be very, very important, and we're gonna keep a very close eye on this probability indicator. In the week ahead, we do have on the 7th, Mr. Chirpow himself is testifying. Don't ruin it. I don't even want to know why. We're gonna cover it. Oh, it looks like he testifies again on Wednesday. Is he in trouble? Probably in front of Congress. EIA short-term energy outlook, ADP non-farm employment change, JOLT job openings, crude oil inventories. On the 9th, we have initial jobless claims, non-farm payrolls, and unemployment rate for the 10th. So next week is pretty packed with spice. We got two chirpows, and unemployment numbers and jobless claims. So we do have some catalysts in the week ahead. I don't think we have any today, unfortunately. I don't think we have any today. Until this breaks 22 or moves up to 23.2, nothing has changed. It isn't more or less bearish. Really, all eyes should be locked right here. That's right. If you're out there and you haven't smashed the like button or you haven't subscribed yet, help us beat Bitcoin to 100K. We're taking the lead here as Bitcoin sold off from 2021. We're gonna get there this year with your help. Make sure you're in there. Join the Discord. Check out our sponsors, Fair Desk, Bybit, and Market Cypher, the best in the biz. Links in the video description below. We're gonna be live again tomorrow. Maybe we'll be live again today. If something happens. I just don't think it will. So that's it, fam. I love you guys. I will be live again tomorrow. We'll be covering Chirpow into next week. That's it. Happy weekend. Go roll one up. I don't care if we got 420 or not. Today is an exception. That's what I'm going to go do. I'm going to go hit the gym, and then I'm going to go get about as high as I can. So, fam, I love you all. Join the Discord. Like, subscribe. I'll see you